All right, everybody. Good morning, good afternoon. This is Trendy John over at Simpler Trading. We're going to go ahead and knock out this week's broad market analysis. This should be pretty quick. We'll be covering the dates of the 28th of July and then ending here on the 2nd of August. So that's pretty exciting. We will be closing out a monthly candle and we'll be looking at some larger candles a little bit later on the quarter, looking at the SPY, the Qs, ES futures, all that good stuff towards the end. But let's start it off with this week's U.S. economic reports and Fed speakers. Again, we are supply and demand traders, and the beauty is we are identifying areas of demand and supply where we are trying to align ourselves with institutions. And we do that by looking at structure in the market. And I do teach you. Not only do I teach you right here at Simpler Trading, but I also have some great videos here on YouTube. So please check those out. Before we get started, if you would, just take a few seconds and hit that like button. That just lets me know that you appreciate the content and I'll keep pushing along every weekend just for you. Coming in on Monday, the 29th, you'll notice that we have nothing scheduled. And then Tuesday, we have some consumer confidence and some job openings. But really, what I think is going on here is we're setting the tone and getting ready for Wednesday. We have ADP employment, and then we have the FOMC interest rate decision. So this should be big news. I'm sure there's a lot of statistics out there talking about probabilities and so forth. And then Fed Chair Powell press conference comes in right after that. Remember, these all of these events are just catalysts that push price to those zones that we'll be identifying before the news. So our job is to wait for price to get there and then we execute that. Thursday, we have initial jobless claims, U.S. productivity, and then construction spending here towards the end of the day. And then on Friday, finally, August the 2nd, you have U.S. employment report rate, and then the hourly wages, and then factory orders. Let's go ahead and move on. Next thing we're going to be taking a look at is this week's earnings. So I'm going to bring those down. And you'll notice right here, we have a lot coming up. So this is going to be a really interesting and fun week just to see how a lot of these guys are reporting. On Monday, we have McDonald's, and then I've outlined, there's Tilray here if you're still interested in something like that. But far as Monday is concerned, my biggest look, I just want to see how McDonald's does tomorrow morning. Then Tuesday, we have SoFi, AMD, PayPal, Microsoft, Pfizer. A couple things to note really quick. I do have Pfizer long-term leaps that we started about a week and a half ago, and they were close to already being up about 40%, which is pretty awesome. If you liked this trade and you happen to get into this trade, just know that they are reporting, and that could definitely, have an impact on that position that's already looking great. Now, my whole plan was I bought out a whole entire year, and so for me, I'm okay if it goes down. It actually gives me an opportunity to add for some crazy reason that we actually push closer up to 100% before Tuesday. Let's just say that they have a really nice day tomorrow. I probably will take some of the position off and then add and keep my fingers crossed that they'll actually pull back on their earnings. One thing that, is difficult sometimes is that when I'm scaling into a position of this much time, I'm not going to put all my eggs into that basket right off. I'm keeping in mind that we have earnings and I maybe got that ad, but sometimes that doesn't happen and we could push up towards 100, 200% or something like that. And then it's a little bit harder for me to add in. So again, if for some reason we have a big day tomorrow, I'll be looking at trimming some of that position. Next thing, Starbucks. How are these guys doing? They had not so great of a quarter last time, and things have not been looking great for them. So I want to see if they're starting to find some sort of value or buyers are starting to step in. Pinterest, I like this name. I've done well on it in the past. Just kind of curious there as well. Then moving over to Wednesday, this should be really fun. We have Boeing, we have Meta, we have Norwegian, we have ARM, Qualcomm, Carvana, right? A lot of great names coming in here. Humana, Riot. So I have a position in Riot, and this was like a build up into the Bitcoin conference. Not sure I really want to hold on to that going into earnings. So I'll make my decision before Wednesday afternoon. So please keep that in mind. Again, if for some reason you like that setup and you were in that setup, my idea here was not really to hold it into earnings. We'll kind of see how that plays out. We'll see how Bitcoin opens tonight, and we'll get to that here shortly as well towards the end of this video. Next thing I want to look at is on Thursday, Moderna. Amazon, Apple, Intel, Coinbase. I have a position in Coinbase. This is a free trade. It's more of a speculation trade, and I believe I have it as a butterfly or a debit spread. I'll have to take a look here a little bit later, but we'll talk about that early this week. Crocs, love this company. We'll see how they do. Mobileye, ConocoPhillips, DraftKings, Roku, Wayfair, Block, so Square, Marathon, Booking. There's just so many great names. And then Friday, like most days, pretty boring. But CVX and XOM are reporting as well. The next thing that I want to be looking at is SPY, the bigger picture. This is where we use the quarterly time frames to give you, I just love to concentrate on the bigger picture. And because of that, I want to show you exactly what I'm looking at. First off, I haven't spent a lot of time with you over the last couple weeks. So if you guys are new subscribers to my YouTube channel, you might have not seen all of this, but it's important to understand that the quarterly cloud has just been absolutely wonderful for many, many years. Matter of fact, a lot of occurrences in the market that create a lot of fear just have pushed price into this cloud, and it's always been support. I shouldn't say always, but it's been support for a very long, long period of time. And you could see that last time we actually closed below it and stayed below it was back here in 2008. And then we closed below it in 2002. Or 10, sorry, and then immediately went bid above and we stayed above and we've been above since then. So you could say if again for some reason we get some sort of big catalyst in the market. It is an election year. Who knows what's going to happen? But I want you to keep your eye on this cloud. Now, for 7/28, that's today, July 28. Last week there was indecision, and now we have an inside quarter. Keep in mind there's a lot of time left before the candle closes. To be fair, we have 2 months and 3 days, so anything can change. And inside candle is great to me because it turns into an if this then that scenario. Okay. And if price goes above last quarter's body, then it's a continuation of strength. But if it stays inside, then we can expect sideways to chop and possibly more downside. So, as I stated before, we have a lot going on politics, earnings, Fed rate decision this week. Expect some wild action. Before I move on, let me go ahead and take you to a whiteboard to show you exactly what I mean when I was talking about the body. So let's say this was last week's body, or sorry, last quarter's body. Currently, the price looks like this. There's a little bit of topping wick, which lets us know that sellers are coming in here. We'll put that right here, sellers. Okay, just like that. And the body of the candle, I'm not including the wick, is all of this open area. I use what's called hollow candles. They help me identify the structure that I teach you guys. So this is going to be the body. All right. And as long as price, and this is what it looks like right now, as long as price is staying within that body, that's exactly what I mean by if this, then that. If price moves above this body, then we have continuation and more strength coming into the market. But as long as it stays below that level, then I'm looking for sideways to chop, meaning we could have some up thrust, but primarily we're just chopping around and could see lower continuation to the downside this quarter. So if I were you, I would set an alert right above that body and give it a little bit of grace, like go just above it. And if price starts going above there, then you know, hey, things are starting to look a lot more bullish. But if we can't get above there, this is a great area to let you know that, sellers are still in control. Now, let's go ahead and move on. We're going to go into the QQQ. And before I do that, sorry. So we still have the same support levels. This is a bigger time frame support. Again, we're looking at the quarterly. So if for some reason we were to dig lower, like I was talking about, I'd be looking for 528 to 505 hold. And I know that's really wide, but just expect some sort of bounce around that 528 level if we were to get there. Notice over here that we started hitting our extension targets and we pulled back. That's okay. We were doing so well. 1, 2, 3 quarters up. Matter of fact, we started this quarter off very strong as well. But again, topping wick lets us know that things are slowing down a little bit. Let's go ahead and type in QQQ. Same thing. If you look here, the quarterly cloud has been great. I'm just using the exponential moving average. It works really, really nice. in the methodology that we teach. Now, this looks a tad bit different, but not really. We had topping wicks. We hit our target of 502. We pulled back, and we expected that. I was getting a little cautious. Three quarters up, started the quarter off very strong, and then we got that pullback. Matter of fact, for our 2024 projection, we hit that target, and exactly what we expected. We pulled back a little bit. Okay, so if price goes about above last quarter's body, same thing. You're looking for continuation. But if it's staying inside, just expect a little bit of sideways to down. Now, what I'll say about the Qs versus the SPY, it's a little bit different. Notice we've already come back to our support and we're kind of holding in that area. So all the way down here towards 441, it's still a level of support. We've hit that first threshold, if you will. We are sort of trying to hold it. We're under it a little bit. So this was 465, and you can see we closed out at 463 basically on Friday. All right. So again, we're at that support. It likes to lead, so it's a little bit more aggressive to the upside and downside versus all the others like the Dow Jones, the RTY, or the IWM. This tends to be a little bit more dramatic, so we've already created that drama and come down into that support. So just know that. So based off just this analysis right here, I'm actually expecting a little bit of a bounce into the Qs and the Nasdaq this week. It may be early, into tonight's open. It might last a couple days, and then again, as a reminder, Jerome's on the mic on Wednesday. I'll get more into that when we look at the Nasdaq futures towards the end of this video. All right, so the next thing that I want to be looking at, just give me 1 second here, is we're going to move on into the dollar. Okay, so let's go ahead and put the DXY on here. All right, so here's the DXY. I'm going to go ahead and go to a daily. That's what we used last week, and it worked really, really well. And this week, my analysis does not change. It's actually going to be exactly the same. The chart that you have in the room is different. So, it looks different, but I want to go over. Last week I said, watch the daily above the cloud. If it gets above the cloud, then it equals caution, okay? But remember, these clouds are resistance until proven otherwise. And if you go back and you count or you look at Monday, Tuesday, Wednesday, Thursday, Friday, you can see that the cloud was resistance. We rejected. And what I'm saying is, I want you to be a little bit more cautious in the market if price starts to bid above the cloud. Right now, it is resistance until proven otherwise. And if it continues to be resistance, what you could see in the dollar is basically a H formation, and we'll come back down and test this demand here. Okay. Now, if this happens, I would expect bullish activity in the market. All right. So again, that's the dollar. If we if we go below 103.7, then I believe it gets more bullish in the market. And if we go above the cloud, be cautious. Okay. That's what we have there on the dollar. Let's go ahead and go into the TNX. This is your 10-year treasury. This also worked out very, very well. Last week's notes, we're going to keep those, just a different chart. I expect flat to down is what I said. This week, as long as the cloud is rejected, then again, I expect this zone, and that's exactly what happened. We came up into not only a supply zone, which was here, we hit that cloud, so kind of a double whammy, if you will. We rolled over. We got that H formation happening, and we're just kind of hanging out here. All right. So again, rate decision coming in on Wednesday, and I'm sure that's going to impact it. But as of right now, looks like it's rolling over and is a H formation. The skew, this is probably, I'm going to tell you right now, I'm thinking about just doing a video on the skew. Most of it's going to be said right here, and but this is probably in my mind the most important thing this week. And the reason why I say that is because the weekly, and since May, this has worked for us over and over and over. Things were changed up. You guys know that. I came up with different levels, and I had a question over this last week, like, "Hey, John, where do you get the levels from the skew? Why do they work so well, and so forth?" You just take the data from here, all right, and they're basically almost like trend lines, and then you just pay attention to what's happening around them. Because this has been a part and an integral part of my broad market analysis for many, many years, I've just come really acquainted with it, and I came up with this zone here. And the way that this works is that ever since May, when we busted above there, every time we came back buying anywhere from 5 to 10 days out in calls, it's worked really, really well. Now, something that hasn't happened since then is 2 consecutive weeks. And I've been saying this for a long time. If we get 2 consecutive weeks under this red line, that is a different look. And the probabilities start going up a little bit more that we could see the extreme levels. Now, most of you, if you're brand new to trading, you have not seen this. The last time that we were back here was all the way here, all right, in 2022, guys. And so you have no idea what it feels like. And even if you're a veteran, you've been trading for a long time in the market, you've forgotten what that feels like. Matter of fact, it feels really complacent out there. I'm not trying to scare anybody because I'm a bull by nature. But one thing that I always realize is when we have these events, that it gets super quiet, people blow up their accounts, there's a lot of bad stuff that happens. You need to be prepared in case this happens. What it means is that if you were to cross compare, if you take the SPY chart and you put it behind the skew, when these skew levels hit these really extreme levels, the market is not looking good. All right. This is like, everyone's talking about market crashes and so forth. Okay. This for me is typically an opportunity to buy within a 1 to 2 week period of time, and I'm buying several months out. So I have been waiting, right? I'm still trying to trade with the trend and not get too caught up on this. But man, if it happens, I want to be prepared. And you guys know that. We talked about it in our happy hour last Thursday night. And if you didn't have a chance to watch that, please do so. All right. It was really informative, but it also should have been an eye opener to see just how well that I chart for you before the year even starts. We've hit most of our targets. Things have happened just the way that we planned them out. Okay. All right. So again, this is where I'm looking at buying calls for a long period of time just in case it happens. My eyes, the first thing I'm going to say that I go to is, hey, you should be long here because it's worked every single time. But I will tell you, it's always at that point where it's difficult to be bullish because things are starting to turn a little bit, right? And there's a little bit more fear creeping into the market, right? And that's where that fear and greed comes in. And you'll notice right here, we've ticked back just a couple points from last week, and now we're right on the edge of fear. So that's what I mean. When you look at this, okay, and then you look at this, you should be right at that point where you start to think, uh-oh, things could turn against us in the market, right? And it's not easy to be like, well, okay, I'm going long. Not for a lot of people. All right, so let's keep that in mind. Next thing that we want to be looking at is going to be the ES futures. I love this part. We're going to start with a weekly chart. So we're going to come up here and let's get over to the weekly and kind of just see how things have played out. I also have some notes that I just want to talk through really quick with you. Overall, my sentiment is bullish with more caution than I had last week. Okay. I figured there would be indecision and some chop, and that's exactly what we got. Okay. Um, what I do want you to also notice is this 9 EMA. So this 9 EMA was flushed and then we closed above it, which is a good thing. The 9 EMA, just like on the quarterly cloud I was showing you, should be support until it's not. Now, this flush, remember, when we are looking at weekly candles, it's very, very important that on this chart, when I'm talking levels with you, we are expecting, if I say, hey, I want the 9 EMA to hold and I am on a weekly chart, you have to wait for this candle to close. We commit to the close. Okay. So we did hold, we held above it, and that is a good sign as of right now. And the lower wick tells me, hey, we probably flushed out some people. And really, I hate to say it, but that's kind of what we're looking for. We want people to get scared out of their positions. And then you want to come in and kind of buy that fear as long as we're at levels. Okay. Now, what I'll be looking for is what's called a rounding bottom. And a lot of times a rounding bottom looks just like that. It comes down. Let's just say this is a candle. Let's fill this in just so it looks a little bit better. And then we create this wick. All right. So this is the flush low. Okay. And then usually I always look at it like this. I hope this helps. This is like the dagger. This really put a lot of fear in people. They tend to have a little bit of PTSD after this. It was a big down day. You guys should have remembered that. A lot of people got flushed out. And then because we have this range of fear in here, any kind of movement back down towards the bottom of this wick creates those memories that they had from last week. They're like, man, I do not want to get caught on the wrong side again. So we create that fear. All right. And things start to look like this. And you're like, yep, we're going to take out that bottom. Things are ugly. People start jumping into puts again. They forget, they're like, oh, wait, there's earnings season coming up. There's elections coming up. There's a lot of things coming up that could create that round and bottom. The first sign that I like to see, let's say we're on a daily, okay, is let's say Monday does this. I'm just going to put this out there. Let's say that Monday does this, but it makes a higher low. And then what I'm looking for is on that next day that we start to round out, okay, like this. And then Wednesday, say Jerome comes in and says something bullish, things go up, then you start getting a rounding bottom. So it looks like this. And then I love that. And as soon as we can go over this, boom, things start to look really bullish. Okay, that is a rounding bottom. This is the flush low. And if we pull back, your eye should be set on, do we take out that low? If we don't, boom, I want to engage, get in, and look for that move up. Now, ES futures a little bit different than the NASDAQ. We only have 2 weeks down here, and you'll notice here in a minute on the NASDAQ that we actually have 3 weeks down. All right. So again, maybe some small, slower rotation back into tech. Okay. So boom, that's what we got there. Let me see what other notes I have for you. Pretty important stuff. So the bear channel is 5543 by 5429. Basically, looking back, doing testing and so forth, the bear channel is right there between 5543 and 5429. As long as price is in there, just beware. It's not bullish yet. Okay, so don't get excited. Bulls have a fighting chance above 5543. That's going to be that 38.2 right here. As long as price gets back above there, that's a good sign, but it will get choppy. That is a good sign. Okay. This 2 week downtrend stays down until 5611. Why? Because that's the golden Fibonacci level. We need price to stay bid above that. Okay. 5611. We don't break the 2 week down move or downtrend until we can get back above that level. All right. If for some reason we see more downside, we have more demand at less than or greater to 5388. Less than 5388. Okay. All right, so another couple things that I want to point out here. These are important if you're studying supply and demand. We had an inside and up formation. We don't want to ignore some of this because this is great for learning. We came into that, but we flushed it the entire zone. That means if you're a supply and demand trader, you're like, oh man, we flushed it, like it didn't work. Couple things to note here. Look at the move out from the inside and up formation. You're going to notice that it wasn't like super powerful. It's not a big candle coming out of the formation. And remember, when we're looking for inside and up formations, they're not all created equal. Notice how slow this goes out of here. It's not a powerful move. We don't have like a big candle like this. So there's not a lot of imbalance there. We flushed it. All right. Again, not the best zone in the world. We flushed it. And, but we closed inside the zone. And why is this so important for you guys to understand? Again, we're committing to the weekly candle, and you might have thought that the zone didn't hold, but by Friday's close, if you look at the zone, it actually held. So that is a positive thing. It just took a lot of stops, and it closed a gap down here from that rollover. Okay, so the 9 EMA is now support until it's not. Use this. All right, and you can see it's pretty confluent with the 23.6. I would use this little area in here as a over-under going into this week. All right, so that sums up the weekly. Let's go ahead and move into the daily. This is where you have your buy and your sell triggers and your resistance level. Notice that I have my trigger long here at 54.36. It's at the inside and up formation. It's that gap fill. It's working a little bit, but again, the cloud is resistance. Notice that your resistance level is coming in right above the cloud. I would expect this to be resistance. And then notice that your short trigger is right here at the inside and down formation. All right. Now, it doesn't, listen, we're going into earnings season. This is really important. Big catalyst, if something awesome happens with some big names, you can see this just boom, get knocked out. This is why we use a smaller time frame than the daily to get into these triggers. And you guys know we're looking for trendy turn signals and so forth when we get at those levels. And again, when we get there, you can go ahead and go to a lower time frame and look for those signs to get long, short, or whatever. Okay. All right, let's go ahead and move on to the 4 hour. Now, this is really important because the 4 hour, all right, is, I wanted you guys just to see how beautiful these are. So compare this before and after. Pretty impressive, right? So you'll notice here that we had a 4 hour zone here, and then we had a 4 hour buy zone. Why is this important? We had a 30-minute here that was tested over and over. Remember, the more we test, not great. When we have something fresh, it typically will turn into something good. Now, I want you to notice we're going to come into here. You're going to notice that 4 hour to the tick hit our 5630 level. It rejected. That's what we expect. It came all the way down. It flushed the 30-minute zone. I took that off, flushed right through it, but it went to the fresh 4 hour zone and worked really well. Again, I can't make this up, guys. It hit the level perfectly and then bounced. This is why it's important to make sure that you are moving through your different charts to understand where we could find buyers in or sellers. Okay. All right. So the next thing I'm going to move on to is going to be the NASDAQ. And same thing. We're going to get over here to the weekly. All right, on the NASDAQ overall sentiment, I'm bullish with caution, not as much caution as last week because, again, we've created 3 weeks down, one, two, three, and that's usually about what we see. We could see more like right here, one, two, three, four, but usually 3 weeks down, you're looking for some kind of bounce. We did get a bounce. Notice a couple things. We hit our second EMA here. We're at the 50. We're close to the 618. If for some reason we break below the 618, which is about 18,617, then your trend has changed from April's rally. So all I'm doing is I'm anchoring my Fibonacci's from this low to this high, applying these fibs or these coefficients on here. These are very important, trendy specific, especially the 88.7. Um, this is what it's all about. So I think going into this week that the two major levels for you this week are the 618 and the 38.2. So that's 18,617 and 19,532. I believe we're pretty range bound in here until we're not. So again, I believe, we're right in here until we're not. So your major levels, like your over under, if we get over here, that's awesome. If we break down below here, not so awesome. I'd be looking for a move down into here. Okay. All right. So that's what we have on the NASDAQ weekly. All right. And notice here we did create a supply zone. So if you're thinking about all-time highs anytime soon, I just don't think it's going to be that easy unless some big names report and they just blow your socks off. Okay. So again, very, very important. Let's go ahead and move on to the daily. Same thing, triggers right here. You got your trigger longs. They're set up and or around some demand and some Fibonacci. We do have the 200 SMA down here. I keep thinking to myself, what if we end up moving back down here? Of course, I'm going to take a shot off this as well. Okay. Remember, don't just trade blindly when they get here. You guys know what to do. And if you don't understand what to do, please reach out to me. I'll be happy to teach you during our morning sessions. All right. Next thing, let's go to the 4 hour. This one looks a little bit different. I've created a 2 hour zone now and now a 4 hour zone. So, and we're creating this 4 hour zone, if you will. This is not coming from past. This is me just identifying this inside and up formation here. So really at the end of the day, this is not a demand zone yet, if you will. It's just an inside and up formation. And I would more or less call it support until we can actually see some kind of big move out of it. Then we get that imbalance there. Okay. But we do have a 2 hour inside and down here. We also have a 4 hour inside and down here. Then we have some more zones up ahead. So a lot of stuff to get through far as earnings are concerned. Any kind of catalysts are really going to have to push through this really hard to make things work. All right. All right. So the next thing I want to look at is Bitcoin. Let's come over here. Why Bitcoin? Because I got some trades like in Riot, Mara, all that type of stuff, and just like the ES futures, I want to be paying attention. Now, everything that I was looking for has worked, and as a reminder, we took futures down here. That was a really awesome trade, and then it gapped up the next session, and then continued to move up. The idea in the new chart is right here. I didn't change much. I just have a new support level, 67.6 and some change by 66,649. And here, notice that this is your new support. We hit our first target. So if you remember the first chart, just basically looked like this. Okay, it was like that. And I was looking for these three targets, perhaps by a couple days, and we hit it, and then we rejected just like we wanted. And my notes for today, all I'm saying is bulls need to build value above support in order for our final target to play out of 70,941. So my final target is here. I want this to hold. I would commit to higher time frames, probably like dailies. Dailies at a minimum 4 hour, but at the end of the day, I want to see that we can hold this level. Okay, so even if we pull back sharp, just like I was showing you in examples before, even if we wick things out, I want to see candles close in or above this level. Okay, just in case we pull back. All right. So that is Bitcoin. And then finally, the VIX is really important as well. So let's go through the VIX. We hit the target that I was looking for. We pulled back. So this idea let me know that, hey, volatility was coming in. I was just using supply and demand like I always do. We hit that supply, we rejected. And so this is letting me know that maybe Monday and Tuesday are fun before we get to Jerome, and then volatility can increase. So the rejection of the supply zone says, hey, volatility is going to come down a little bit. All right. And then I'm looking for in here, if we get back to 1575 to about 15 right in this area. So if we drop down here, say over Monday, Tuesday, then right before Jerome, we're going to fall into that little pocket of demand, and we could see a spike of volatility out of there. So that's what I got going into this week for the overall broad market analysis. And then here in about an hour or so, I'm actually going to create a video and do a live video of me creating the neutral strategy. So, yay, right? Everybody's been asking for that. So, the SPY and QQQ neutral strategy, I'll be creating that live, sending out a video, and going over how I got those levels and how you can trade it. I really appreciate everybody. Again, don't forget to hit that like. Thank you so much for everything. And thanks for being here. And for you over at Simpler Trading, we'll see you guys tomorrow morning. Have a great day.